Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you've seen this show before, you know we don't just talk about stocks that are about to, or companies that are about to declare earnings. We talk about how to make money from those events. Now, this is the week of April 27th, 2026, and this is shaping up to be an absolute massive earnings week. Peak concentration here is in mega cap tech, and this could really drive the index direction and volatility. So we hit critical mass midweek this week, and this is highlighted by a rare clustering of some of the Mag 7 stocks. Microsoft, Alphabet, Amazon, Meta all report on Wednesday after the close. And we continue on with Apple on Thursday. This is a huge inflection point because AI is really concentrated here on some of these names, and as far as the massive amount of money invested. So we're going to go through our list. We're going to take a look at the best potential candidates along with some trade updates, and I have a new trade for you, all starting right now. All right, we're kicking off the week already with earnings. Markets are pretty quiet right now, but we have a few companies that have already declared this morning. It's kind of a warm up as we get into the week, but there you see it in the middle of the week. We really start cooking, really beginning tomorrow, but especially Wednesday and Thursday, following up with some massive energy companies on Thursday and Friday. So we're going to go through the list, and just a reminder, how we do this is on the left-hand side of this of our sheet. These are the breakout stocks. These are companies that historically move more than 10% through their earnings or have an expected move of 10% or greater. And we know that expected move because we calculate that through the options that are traded on these companies. And on the right-hand side of the sheet, we have the quiet stocks. These are stocks that usually move single digits. They're pretty quiet because they're usually massive companies or they're in a mature sector, and they just don't move very much. And believe it or not, some of these tech giants that you see here, they only move single digits, and they probably will this week as well. However, they have the potential for something different, and we're going to watch that. So let's get to our list. We're going to start with the quiet stocks, and let me give you an example of a quiet stock. Now, this is Pfizer. Pfizer does not declare earnings this week. They declare next week. But I like to use this as an example of something that just not only doesn't move around earnings, it just doesn't move. It just moves sideways. It chugs along. It has a few spikes here and there, but nothing really moves this stock. This is a good example of a quiet stock. With these stocks, we sell option premium because implied volatility, which is one of the pricing components of an option, it rises, it elevates going into these earnings announcements. And we like to sell options at that higher value going into the earnings announcement because the stock probably isn't going to move very much, and we can capture profit when that IV or implied volatility drops. Okay. And which it always does right after the earnings announcement. Implied volatility, it's called an IV crush. It just crashes down. And that is how we profit. We use an iron condor. We never trade options naked. We use a strategy called an iron condor. Okay. Lots of information out there on this strategy. It's nothing new. It's been around for as long as options have been traded. Okay. So let's take a look at our quiet list this week. All right. And we're going to begin our conversation with two companies that declared already today. And let's go to the charts and check them out. All right. So we're going to start with Verizon. All right. They had earnings this morning, and they are currently up 2%. Okay. Now, the average expected move is under 5% usually for Verizon. So it is right in that range. We'll see where we close today, but pretty quiet. It definitely moved the expected move for the stock, really a non-event. Now, what is surprising is Domino Pizza You saw that on our quiet list, and look at this. Now, Domino's is off the lows, okay, but it was down at one time over almost 10%, which is a bigger move than expected. The average expected move for Domino's is just 5%. But what happened here is a disappointment in the earnings call, in the forward-looking guidance. They feel that their customers are going to start feeling, or are currently feeling, the pinch of pricing, and that is not good for somebody that's in the field of selling to the consumer rather than a B2B or B2C, business to consumer. All right, so when the pizza companies start hurting, that is not good. Okay, so we saw a bigger move than average, which is one of the risks with these quiet stocks, and we try to get you only invest in those stocks that are consistent with these quiet moves. All right, now tonight after market close, we have Cadence Designs. Now, Cadence is a tech company. The average expected move here is 5%. Okay, and you can see, last earnings event wasn't really much. Stock just bounced around it. That's reflected here in this vertical dotted line. And then earnings before that, back here in October, not much of a move. We had a little gap down, but not much. That's considered a quiet move as well. It's single digits. All right, so we'll keep an eye on Cadence Designs, but good to avoid. I love the pricing here at 336. Usually we get very good pricing on the options when you get up above $100, and that is a one that we would normally look at. But this cycle, we're sitting out this cycle, and we're just going to monitor it. Okay. Now tomorrow we start warming up here. UPS, United Parcel Service. Okay, they will declare Tuesday, April 28th, before market open. The average move here is about 6%. Now, we're not concerned with moves in between earnings events. We're just concerned with earnings at the event. Okay, and you can see here, look at this. A slight gap down, rally higher, okay, or actually gap higher, and then rallied, a loss on the day, but then immediately rally back up. I mean, that's pretty quiet. For the stock, trading from literally 107 to 103, $4 move on a $100 stock. Very quiet. All right. So moving on, we have Coca-Cola. All right. They're going to declare tomorrow, Tuesday, April 28th, before market open. And the average expected move here is just 3%. Okay. So again, you can see my scaling over here on the right-hand side is in dollars. If I switch that to $2.50, or maybe even $5 as I bring my chart down. There we go, $5. You can see that this is a pretty quiet stock. Okay, it hardly moves $5. It takes about a month to do so. All right, we have stocks that move $5 a day. Okay, so a stock that takes a month to move $5, that's a quiet stock, and we only look for about a 3% move on Coca-Cola tomorrow. Also, another quiet stock is going to be Visa. They will declare tomorrow after market close. That is Tuesday, April 28th, after market close. This, again, is another notoriously quiet stock. Okay. Every now and then we see a move a little bit more than expected, but not very often with Visa. All right. And you can see here, that's a quiet move. I mean, just this is a quiet move right after that earnings announcement. See this big spike here? That was not earnings. Okay. That was a different event. We're just focused on earnings. All right. So quiet mover there. Now we get into the meat. Google coming in on Wednesday after market close. The average expected move, you're not going to believe this. It's only 5%. Okay. 5%. So we are going to be very keen on listening to not only the results are, but what the forward-looking guidance is on all these stocks that I'm about to talk about. So listen carefully here. I might sit these out this cycle, honestly, unless I could get something really priced well, meaning I could go 10% out of the money, get nice premium. I'm not saying that's available on Google. I would need to look, okay? But something if they're expecting a 5% move, I'm looking almost double digits just to be cautious around this current cycle. Okay. Okay. The same is going to be with Amazon. They will declare Wednesday, April 29th after market close. Okay. Average move here is about 7%. Okay. So single digits, getting into the upper ends of that range, they could move 7, 8, 9%. All right. But again, be very careful with these around this particular earnings cycle. You can see last time, believe it or not, that was just a 4% move right there. And I believe that was another 4% move, maybe 5. So it did move within 2 days, about 9%. So that is one thing you need to be wary of on a stock like Amazon. All right. Now, Mastercard, don't worry. I'm not going to leave off Meta or Apple. We're going to talk about them. All right. They're coming up. But I did want to switch gears here real quick. Mastercard will declare earnings on Thursday, April 30th, before market open. All right. The average move here is just 3%. So just like Visa, these are two really good stocks to trade with iron condors around earnings. Okay. And pricing should be here. This is a $500 stock. You should lots of options on this. You should be able to get out of the money, get some decent premium, and allow it to stay in that range between your call spread that you sold on top and your put spread that you sold on the bottom. Again, we're talking about an iron condor here, and it has a trading range that it needs to stay between, and that's how we profit. Okay, if it stays in that range. Also, Merck. Okay. Merck will have earnings on Thursday after market close, or excuse me, before market open. Thursday, April 30th, before market open, and the average expected move here is just 4%. Okay, and you can see this stock again. It takes about a month to move $5. I mean, it'll swing up and then it'll kind of meander around and not do much, and that kind of carries on through earnings. Now here's Apple. Okay. Here is Apple. What is the expected move here? Look at that. Oh, they don't declare on the 29th. Sorry, we have a little. This will be Thursday. Okay, 4:30. And let's just make sure where we are. I think it's after market close. Let's just double check. It is the 30th of April, Thursday, after market close, and we are expecting a 4% move on Apple. Okay, and again, you're just looking at some of these moves here around earnings in the past. Look how quiet this stock is right now. I mean, yes, going from really 285 to 246, a $40 move. That took 2 months to do. So $20 a month. For a $200 stock, okay, it takes a month for it to move 10%. And we have stocks that will do that in a heartbeat. Okay. So just remember that. A couple more here. 2 more that I'll talk about, and then I'll get to some honorable mentions a little later on. So you're going to want to stick around for those. These that we're identifying here are some of our best candidates for these strategies that we implement. So right now we're talking iron condors, and we got 2 massive companies that will declare on Friday. Okay. So Chevron, they will declare Friday morning. That will be May 1st. Believe it or not, May 1st, Friday, before market open. The average move here is just 3%. Look at this. The trend was moving higher here. They had earnings and it didn't even show up. It barely showed up on the chart. I mean, look at the quiet move. Here it was trading sideways and it barely even did anything. Chevron is a great stock to trade with these strategies, and so is another stock from the same sector, and that is Exxon Mobil. They will declare Friday, May 1st, before market open, and the average expected move here is 3%, and these 2 charts look the same, okay? And the reactions, these are just massive companies, and it's really hard. Even with the current oil issues with oil, these 2 companies are very consistent in their production schedules, in their refinement schedules, and all of that's just cooking along. So it's hard to give a big surprise in these with these two companies in the sectors that they are in, because everything is just so planned out, and even a short term disruption does not impact their stock price very much. Okay, all right. So that is it for the quiet stocks for now. We'll revisit a few in a few moments, so you're going to want to stick with us. But I want to switch over to the breakout stocks because we haven't really had any good candidates for this earnings cycle yet. But now it's changing, and we're going to get to a breakout stock that you'll definitely want to pay attention to. So, what is a breakout stock? Well, again, these are companies that move greater than 10% around their earnings events. All right, they move double digits. They're big movers. They're scary as heck to have unless you have the right strategy. So for these, we use straddles and strangles. All right, we use straddles and strangles around these opportunities. Yes, we're paying for higher pricing, higher implied volatility. We are buying that because when the stock moves, these options go in the money. We're not so much impacted by that Greek, okay, by higher implied volatility being Vega. All right. So we're not really impacted by that once we're in the money with either our call or our put. So we're buying a straddle or strangle. What you're looking at here is Akamai. Akamai doesn't have earnings for another week yet. May 7th is their earnings date. So we will be talking about them again. But I just love this example. This stock moves usually double digits around earnings. It's gapping around. It's flying around. You're looking at 12, 15, 18% moves on a regular, consistent basis for this stock. So we'll talk about it more next week, but I wanted to give you some visual representation of what one of those stocks looks like. All right. So let's get to our list real quick. And we do have a handful of stocks, and you're not going to believe one of these here in just a moment. So you're going to stick around here. All right. But we're going to start with Enphase. All right. Now, Enphase Energy will have earnings tomorrow, Tuesday, April 28th, after market close. This is a mover. Now, I priced out what a straddle or strangle was gonna cost, and based upon the current options pricing as of the time that we're speaking here, this move it would require about a 20% move in the stock, okay, to make a profit. And they're forecasting about a 15% move. That's hard. This move back here, okay, this is like a 30% move right here back in February. So it would have paid off. But it's really hard when you're faced with a move that's greater than the average expected move. And so I'd be very careful with Enphase. We'll see how they do. I'll sit that one out, and that'll be after the market close tomorrow. On the 28th. Now, another stock, and you're not going to believe this one. If you watch it on a regular basis, then you'll know what's happening here. This is not a data error. This is Avis and Budget. Okay, Avis, the Avis Group, car rental company. Okay, this is what's known as a short squeeze. Okay, and this is where the short interest in the stock got so high that certain hedge funds decided no more, and they started buying. And this stock went up, and when you put too much pressure on the shorts, they in turn have to start buying because they have to offset their position. Okay, they were short and wanting the stock to go down. Let me go back. Look at this stock price back here. It looks like it's just flat and didn't do anything. Well, that's not true. Okay, so if we go back in time, you can see it looks like a regular stock. Okay, it looks like it performed in a regular basis. It had earnings and, kind of big day after earnings, and then gapped down here and moved around, literally going from 155 to 133 in a month. Okay. So roughly $20 in a month instead of 2 months. It only took a month. Okay. But then we had the short squeeze here. And anytime you see a stock go up like this, it'll come down even faster. And that's what it did. People knew this was going to happen. It always happens. But here's the thing. This is now a $200 stock. All right. Right now. They're going to declare tomorrow, Wednesday, I believe, April 29th, before market open. The average move here is 14%. Now, I priced out the trade, a straddle or strangle, and right now they are atrocious. I mean, they are expecting a big move. Is it going to be up or down? I don't know. Is it going to go from 198 to 100 on Wednesday? I don't think so, but I don't know. But look at these massive moves over the past few weeks on Avis. Definitely a fun one to watch. You want something fun to watch? Watch what this does on Wednesday morning. First thing, it'll warm you up for the afternoon when we have all the big Mag 7 stocks. Five of the 7 declare earnings this week, as I mentioned. All right. So let's keep going. Okay. So another one here is Bloom Energy. Now, this is a stock that's gained a little bit of notoriety here lately. It's been in the news a lot, been reported on. Look at this nice move. They are going to declare tomorrow, Tuesday, April 28th. And sorry, I'm a little out of order there. That is Wednesday. I have Tuesday there. Let me fix that. This will be Wednesday, same day as Avis. Okay. So Wednesday, April 28th. April 29th. My bad. I totally messed up on that one. The 29th is just confirming that. The average expected move, though, here is about 12%. This thing has moved around earnings a little bit. There's a little volatility there in the past, bigger volatility back here. Okay. But if you were to do a straddle or strangle, this is a $235 stock. All right. You would ideally like to only pay $235 for this, but that ain't going to happen. Okay. A straddle or strangle for this, it's going to require, last I priced it out, it was going to be about 15 to 18% move required, even though the average expected move is only 12. So again, possibly another stock to watch this week would be Bloom Energy. BE is the symbol there. Okay, moving on through the list. Okay, we have Wayfair. Now, here's the thing about Wayfair. They are going to declare Thursday, April 30th, before market open. Okay, so on Thursday. The average expected move here is about 10%. But here's the thing about Wayfair is they're a $75 stock, so reasonable price for a straddle or strangle. But they really get influenced by tariffs and by the consumer. And there's a lot of moving parts with a company like Wayfair. And yes, a lot of companies have these same issues. But Wayfair is a little bit different because they are a discount site. Okay. Wayfair is just in that space. We're offering good value. And so their margins may not be their margins may be tested here. So it's definitely one to watch. Wayfair, definitely. And then Rivian, okay? Rivian on Thursday, April 30th, after market close. Rivian's had some problems. The average expected move here is 13%. This is a $16 stock. I did price this out, and it requires a 20% move right now. That could change. Option prices do change each day, so I might check it out one more time. You can see this last earnings event. Look at this pop here. It literally went from closed the day of earnings. Okay, it closed at $13.99. Okay, $14, and then they had earnings after market close. So the next day it popped up and closed at $17.73. Okay, so a $3.73 move on a $14 stock. That's a big move. Okay, big move on a percentage basis. So we'll keep an eye on Rivian because that, little less expensive to trade because it's only $16 stock, but definitely want to make sure you get pricing that doesn't require a 30% move in the stock. Okay, to make a profit. I'd like 10%. I'd like my pricing to be at 10%, and then it move 13 or 15% is kind of the deal there. All right. So we're closing out our main list here with Reddit. Now, Reddit will declare Thursday after market close, And the expected move here, believe it or not, is 15%. Now, Reddit does hop around earnings. It has been, believe it or not, consolidating a bit. I mean, yes, we were, small daily moves back here, and then we did rally up, but now we're just kind of, it's looking like we're going to get a pop out of this. All right. And which way is it going to go? And just a quick example of kind of what I look at here when you find something that's forming a little technical pattern here, that's kind of coming into that point. Well, you can expect a pop, and I don't know which direction. That's why a straddle or strangle is ideal. I'll definitely be looking at Reddit here later this week. All right. So now I've got 5 more stocks I want to mention. Okay. And these are honorable mentions. Okay. But they're just huge stocks, and we want to pay attention to them. One tomorrow is GM. Now GM, they're going to clear tomorrow 428 before market open. So tomorrow morning, the average expected move here is right at 10%. So it's like, is this going to be a quiet move or a big move? I don't know. But GM is facing so many problems right now with their 6.2 liter V8 engines and transmissions. I can't even get into it. Just the number of lawsuits that are coming out, and they're weathering the storm. Honestly, they just announced some things that I don't think many people are happy with for upcoming in 2028. You can look that up. I'm not a big fan either, but this could cause a little volatility here. So we'll see. But man, I don't know how long GM can weather the storm, and then they might start looking like Ford, which is, a much cheaper stock. Okay. Now, another company is Robinhood. They're on my map only because, they continue to grow, get bigger and bigger. This is a brokerage. All right. And their average expected move is now 8%. This number keeps growing. Okay. It keeps getting bigger each earnings cycle. So we'll definitely want to keep an eye on Robinhood because they're in that class of stocks that just usually don't move very much. Okay. So watch Robinhood. And then, believe it or not, Meta is an honorable mention, partially because it's a $600 stock. Options are still there where we can do an iron condor, but it's in that AI space, and we need to be very careful with this, considering the average expected move here is 8%. Now, if I didn't mention, they will declare Wednesday after market close, along with Google and Amazon and the rest. Okay. So Meta will declare Wednesday, April 29th after market close. And, part of that group right there, that after it's going to be crazy Wednesday after market close, definitely worth paying attention to for Meta. And then 2 massive companies, ConocoPhillips, they're going to declare on Thursday, April 30th, before market open. And again, just like Exxon Mobil and just like Chevron, ConocoPhillips has an expected move of only about 3%. Options, the reason it's an honorable mention is because current pricing is a little hard. Option prices are still a little on the cheap side. So selling premium, we want them expensive. We want premium there to be able to get a good credit to where we have a good opportunity for success. And I'm just not seeing it in ConocoPhillips right now, but they're another one. And then we're going to finish out with Caterpillar. Believe it or not, this is an $825 stock. They are going to declare Thursday, April 30th before market open, and the average expected move here is just 5%. So another good one to look at, even though you got to be careful with these really expensive stocks because sometimes their options, instead of every $2.50, will be every $5. Maybe not. They might be every $10. And once you get to where they're every $10, doing a spread means it's $10 wide, and that's a risk of $1,000 minus your credit. And so the margin gets a little pricey for smaller accounts. Bigger accounts can handle it, but smaller accounts sometimes have an issue. So that's why it's an honorable mention right now. So that is an extensive list of everything we went through. You can see the group that we are focused on this week. Really, there's over 800 companies. I didn't even mention all of them that I like looking at. Brinker International and Qualcomm and all these others are declaring earnings this week. And so there's over 800 companies declaring earnings this week, and we're focused just on 32 of them. And we don't even have 32 on this list. Okay. These are some of the better ones. Okay. But I did want to make sure that the ones that you're familiar with and that you love to follow, we talk about. All right. Speaking of which, let's talk about trades. All right. So last time we visited, we had a trade that we did for you. And this was an iron condor on Progressive. So what you're looking at is the chart on the left and then the options modeling risk graph on the right-hand side. Okay. And you'll see a horizontal line on top and a horizontal line on the bottom, above and below price. And that we just want it to stay between those two lines. Okay. Stay between those two lines and we will profit on this trade. Okay. We sell a call on top, call spread on top. We sell a put spread on the bottom, bring in a credit. All right. And then we look for the stock to stay in the range and we can let this expire worthless and keep the credit. So how did this trade do? Okay. Well, let's fast forward a little bit. And I zoomed in on the chart a little bit so you could see the price action. We had the earnings event and the stock actually rallied after their earnings. But look at this. We got such good pricing that the stock stayed in the range. All right. And we were able to close out for our credit. We got the max credit, which turned out to be $115 per spread. Okay. Now, I base this on a $10,000 account, so a small account. And so we just did one contract on each leg, and it turned out to be $1.15 credit or $115. And based upon our risk, which was $5 minus our credit, that was almost a 30% return in just 3 days. Okay, we were in the trade for 3 days and made a 1.15% return on portfolio. Okay, a 30% return on risk, but a 1% return on portfolio. Now, why that's significant is because if you do that, if you just did one trade a week, that's 4% a month. Okay, or more than that, 4.5% per month. And then you annualize that, and you're talking 48% on an annual basis, 40% return on an annual basis for a stock that doesn't go anywhere. Okay, that is the potential, the massive potential that these trades hold. Hold. All right. So what are we going to do this week? Well, we're going to do the same thing. Why not? Rinse and repeat, except we're doing it on Visa. So our trade of the week this week is on Visa. And for this particular trade, I've got my strikes not $5 wide. I've only got them $2.50 wide. Okay. So keep that in mind here. Now, with that makes our max risk $2.50 minus our credit. And our credit right now, last time I checked, was about 67 cents, which is about a 33% return on risk for being in the trade for a few days. And you can see where the upper break even and the lower break even lines are. And we just need the stock to stay in that range, stay in that rectangle, and we will be able to add to our win list again. So we'll see how it trades this week. Come back next week and we will review this trade and we will see how it did, and we will discuss all the earnings that are coming this week. But man, I cannot get over how massive of an earnings week we have this week, especially for AI and all the money that's being invested there. All right. It could be a real market mover come Thursday after these big companies that, Google and Meta and Microsoft, Amazon all declare on Wednesday. So everybody watch out, watch the new business news and keep track of all these because, information is your best resource. Okay. And that turns into knowledge, and that is a great asset. So everyone have a great trading week, and I will see you again next week. Take care.